Welcome to Perusing's Appraisers on Purpose podcast. Our podcast showcases inspiring appraisers and professionals from the industry who are leaders in their field. How did they get to where they are? What have they learned along the way? What can we learn from them? Your host is real estate investor, entrepreneur, and appraiser, Michael Hobbs.
Hey, welcome, friends. Thanks to another engaging, informative, and just overall enlightening episode of Perusing's Appraisers on Purpose podcast. I'm your host, Michael Hobbs, and I'm excited to have Scott with us today. Scott, thanks for joining us.
Oh, thanks for having me.
Appreciate you, buddy. Friends, would you know some data, right? Here's some data you may not have known. And that is, over the last couple weeks, 72% of you that listened to the podcast and actually enjoyed it based on your longevity had not actually hit the subscribe button. So do what only you can do and show Scott some love and subscribe and like his podcast because he likes you and he wants to be liked. So Scott, thanks for being with us. And, you know, everybody wants to know, were you born this way or how did you get into the appraisal and valuation profession?
Yeah, that's your opening question, I know. And I guess my answer is maybe.
Yeah, right?
My father was an appraiser, so
Wow.
like many of my peers that share that reality, there was no not knowing what an appraiser was growing up in my house.
Yep.
I love my dad. We spent a lot of time together, and I would regularly go to meetings with him, go on inspections, attend business dinners. So I was exposed to this profession at a very young age.
Wow.
I think often of the famous line from I think it's the Wordsworth poem, The Child's Father to the Man, which expresses the idea that our childhood experiences help shape who we are as an adult, which I completely believe.
Yes.
And I would say, saying all that, and back to your question, if I was not born this way, I would say it heavily influenced me to be this way.
Got that. I really appreciate that.
Yeah.
What was your earliest memory, Scott, of dad doing dad's work or dad's business?
Yeah, good question. Some of it's appraisal related. My dad was an entrepreneur to his core.
Oh,
So
really?
he was always buying and selling buildings and involved in a lot of things personally. And so through the lens of a child, I remember going to buildings he bought. He'd buy a lot of buildings at auction that
Oh, wow.
sometimes were full of contents. He bought a building downtown Cincinnati on Court Street as an example when I was a kid.
Yes.
And it had formerly been the Foss Schneider Brewery Company.
Really?
Germans, a lot of Germans in Cincinnati,
Yes.
and a lot of breweries. And anyway, the basement of this building was filled with these old beer brewing crates.
Yes.
So in addition for the labor that we had to on many Saturdays doing some cleanup and clean out, we got to keep some of them, and I still have a few to this day. So got a lot of memories of that. My dad always had a way of kind of making things fun, but it was all real estate all the time.
Amazing. Amazing. Did you by chance ever have those experiences where because your dad was involved in the acquisition of buildings, even those that are in default, that suddenly you got gifts like pre-owned opportunities?
Not necessarily. Just, yeah.
Yeah. I remember my buddy in particular, having been like your dad and bought a lot of those kind of buildings, he always loved the first entry into the building. Sometimes you had to cover your eyes or hold your nose, but every once in a while you got a gift like, look, there's a chainsaw, or here's some gardening tools, whatever it might be.
Yeah, the only one that comes to mind in that vein was I was doing this up through when I was early married and buying, selling buildings and holding some homes and renting them out, and bought a home that was out of an estate, and it was full of furniture. And my one sister got married before my wife and I did by about 6 or 9 months.
Okay.
And I gave my sister the dining room set that was in this house. It wasn't tremendously significant, but it was a nice, well-made, older wooden dining, and she still has it to this day. So there was a lot of things that were, to your point, that maybe came our way.
Oh, I love that. That is fantastic. So your dad obviously deep into real estate. And did you have one of those experiences as a kid? It was like, hey, I kind of like what dad does. Or you're like, there's no way I would ever do what my dad does. I want to go be a musician or some version of that.
Yeah, 100% resonates. Yeah, I think when I was in college, I didn't know what I wanted to do. I was in high school. I was interested in journalism. By the time I got in college, I was thinking maybe I wanted to go to law school. Didn't know. Knew real estate was definitely there,
Yes.
and so I don't want to frame it as the last thing I wanted to do, but I really didn't have it in the forefront of my mind. And I don't know if George Opelka, his dad Greg
Yes.
Opelka, was
Yep.
he was a Chicago guy,
Yeah,
so
Chicago guy.
and very very long career, thought leader, and anyway, I'm a long lead up to say, I heard George one time say he didn't necessarily find the profession; he felt like it found him, and I always laughed at that line, and I appreciate that more and more. I think there was a large degree of it finding me.
Amazing. How did that come about that it found you, given that you were headed down the journalism path and thought maybe one day, I don't know, might you get a Pulitzer?
Don't know. I think just some realities. Graduating into, I date myself here in 1982,
Sure.
into probably one of the highest interest rate, lowest, poorest
Oh,
markets ever,
yeah.
and that translated just beyond real estate and to across the
Yeah.
economy. It was tough to
Yes.
find a job. Came
Yeah.
back home and got an interim foot in the door with dad's business, and then one
I
thing
see.
led to another. So yeah, it was a
Wow.
nice progression, but it wasn't like I gave it a lot of formalized or considered thought.
I hear you on that one. When that opportunity showed up, as you described it, as getting involved in dad's business, did you get more involved on his investments and acquisition side, or was it more on valuation, or were you're just a field worker out there just gathering information?
Yeah, a little of all three, and then it did progress. I liked the more I got exposed to appraising, the more I liked it.
See.
I wasn't not to digress on point. The investment, the small investment piece, a lot of people are better at that, I think, than I was. If you're a little bit of a handyman, you can do some of I couldn't do any of that. So the cost of getting a lot of rehab and work done was always an additional factor of consideration for me.
Yeah.
And so and the more I got exposed to appraising, the more I liked it and was able to, between my dad and he had two other appraisers in his office, and just
Oh, okay.
the more I got exposed to them, the more I
Wow.
learned. And then before I got out in the field to do fee work,
Yeah.
uh, I'd actually spent the first couple years of my career out of college with the Ohio Department of Transportation
Oh,
doing
God. Okay.
appropriation right away condemnation work.
Really?
And so learned a lot there. And that was also the day and age, Michael, you might appreciate the training was they'd send you away to the 2 week uh,
Course.
Society 101 course at Purdue University or at Ohio State or wherever. You'd actually go
Exactly.
off site and do that deep immersion. And
Yes.
your last day, that Saturday morning, you got a big thick packet of hypothetical data and you had half the day to put an appraisal together. So
Oh, wow.
it was good stuff. Yeah.
Some things of the past, maybe they should bring back.
Brother, I don't disagree.
Oh, they say if you want to learn a foreign language, don't go get a tutor. Just drop you right into that new
Get an
environment, that
airplane
new
ticket.
city, that new country, and
Correct.
you do learn.
Figure it out.
Oh, I love that. I love that. So was your dad, you mentioned that he also had two other people along with him. Was it commercial and residential then?
It was more of a shared office space kind of thing. A
Okay.
lot of small appraisers, as I learned, that was not uncommon. You shared
Yeah.
back in the day a receptionist and a copy machine and the MLS
Yes.
books and the data, and so you divide that by four. It makes it more cost effective.
Yep.
And the other two appraisers were mostly residential. I'm a certified general appraiser.
Yeah.
We were doing this before certification,
Oh,
by
yeah,
the
you
way,
were.
but cert gen. So yeah, both did work. Through my dad's connections, also got involved as a sort of a junior appraiser, analyst, or whatever on some expert testimony and some legal
Oh, wow.
cases, which were very interesting.
Yes.
And I got a little exposure to that at the Department of Transportation too, on
Okay.
eminent domain or takings that they were always kind of friendly cases, so to speak,
Yes.
but they'd go to court, and it's it's a it's quite a learning curve when you're 23
Ooh.
and you're testifying for the first time.
Most people I could imagine hearing that are both in awe and cringing at the possibility that they might have been subjected to that at such a young age.
It is. and I did it a little bit in the early part of my career, and the people that do it, it's quite a specialty,
Yes.
and some are very good at it. But yeah, and there's just a lot of prep, and I was too young to know what I didn't know, and
Yes.
I had a young, one of my first cases, I had a young attorney who was a state attorney who was as young as I was, and
Okay.
so I think the blind we're leading the blind. The property owner was unhappy with the take, and he hired a very seasoned, experienced attorney in Cincinnati. And
Okay.
anyway, I've got lessons which you and I can talk about over a coffee or another drink at some point. But it was all great learning experience,
Yep.
and yeah.
Amazing. So you get an opportunity to be involved as an expert witness at 23, and yet your career didn't keep you in that lane. How did things proceed from your early 20s onward?
Yeah, that's a great point, and we don't have enough time to cover my entire journey necessarily. But yeah, from the grounding and the base of the
Mhm.
right of way and the condemnation work, did independent fee work for a number of years,
Okay.
enjoyed that, and then one of our clients, a mid-sized Midwestern bank out of Cincinnati, reached out for a staff appraisal position,
Oh, wow.
and it was just enough interesting to me that that was kind of my first jump and foray into the bank side.
Yes.
So that was an exposure to the practical components of review, daily management of a review team, support
Mhm.
across multiple lines of business, all the
Oh,
stuff you
wow.
do.
Yes.
And then that sprung into probably one of the bigger corporate jobs. I worked for General Electric, and they were
Oh,
getting
really?
into, this is just pre-subprime, so
Sure.
do that overlay to the timeline, and they were
Wow.
getting a big appetite to package and securitize loans. So then I
Yep.
was part of a review team that was a part of the collateral piece of that securitization process for packaging and securitizing the larger pools of loans.
Wow.
From there, I spent almost 10 years then with Bank of America in Texas, taking all that knowledge again, being a part of and helping lead a big team or on the loan servicing side.
Sure.
And we did specialized kind of GSE and VA operational support and workflow. We did a dedicated uh, or rather a delegated VA support process on their loans,
Really? Okay.
which was due to a relationship the bank had with VA and was willing to support. I think there was one other bank that was doing it, and a friendship at the time with Jerry Kiefer, who was the chief appraiser at VA.
Oh,
So
okay.
I was able to kind of work on that, and then from there went to Goldman Sachs for about a year and a half, 2 years on the
Oh,
investment banking capital market
sure.
side prior to my position now. So
Oh,
yeah,
wow.
it's been, I guess if there's one to expand your question a bit, or your comment, I think I've had the great advantage, I think, kind of looking back, that I've been able to see this profession from a lot of different angles, not every angle, but
Sure.
a lot of different perspectives,
Hmm.
and understanding kind of where and how appraisal and valuation fit in.
Yeah, with that opportunity and so many different involvements, say, if you will, in being involved in so many different segments of
Mhm.
valuation, collateral review, so many different parties that are directly or indirectly involved. Wow, what perspective that provides for you.
Yeah, unbelievable. You get a firsthand appreciation. Real estate's, I think, one of the largest, if not the largest asset class. Why
Yep.
it's important, why valuation then is by extension important to that.
Mhm.
And yeah, again, all those touch points. And yeah, so it's it was, I won't call it necessarily a blessing, but
Mhm.
quite an opportunity to really have that perspective.
No, I completely hear that. What what you mentioned that you spent some time as a field appraiser. Were you
Mhm.
still working with your dad at that point, or were you working separately from him, or how did that come about? That's always an interesting conversation of how does that go. And then clearly there
Yeah,
was a time that you definitely were no longer in the field.
yeah, all amicable, and really more than half of the kudos on my dad's side just for managing that with me. There was no discord, any unhappiness, anything other than just I saw, maybe to your question, yes, the independent fee work was I was the fourth appraiser in that office I described that
Oh, I see.
my dad had, and we collaborated on some things. He still was able to. He worked on a couple of big cases that he did the expert testimony. Again, I kind of did the analysis and a lot of the field work. Worked on a lot of stuff together. It was a lot of
Hmm.
fun. Learned a lot, and then I was able to. This is back in the savings and loan and Balfrine days, and
Oh, yes.
you really were able to work and build your own client list. So I
Yes.
had a couple, 3, 4 good clients that I were local to the market that I served and tried to give really good service to.
Oh, nice.
Having left the state of Ohio, it tried to advantage that as a big feather. I witnessed while I was at the state, every independent fee appraiser that did work for the state had previously worked either for the state, for big city municipalities and
Yeah,
jurisdictions,
sure.
or they had heavy credentials. So anyway, I used that as I began to do a lot of fee work for the state
Amazing.
and the various cities. So anyway, that was kind of the mix.
That's fascinating. And given that opportunity that you had, were you focusing primarily on valuation of commercial properties then? And stayed in that lane because you'd been around eminent domain and some of the more complex opportunities that show up, or because you'd been exposed to both residential and commercial, both growing up with your dad as well as coming into that post education?
Yeah, I would say a little bit of a mix, maybe more the latter. So just on the fee side, just a lot of small
Okay.
residential work. And then the extent of me, and I think you've got an extensive commercial background, but the
Yeah.
extent for me was really limited to small multifamily and then just mostly condemnation right away.
Okay.
There was some trailing highway jobs in the state that were being done and finished. So that was work that fit, that I understood, and I had a lot of experience. I had gained some experience on how to do that
I see.
relative to we get a big highway job, we'd set up a comp book, we'd do a variety of things, and
Oh, yeah.
I always enjoyed that. But
Fascinating.
anyway, to your question, I kind of a mix. Yep.
Yeah, I love that. Absolutely love that. I'm curious. I know we've chatted a bit, but that we actually every so often run special seasons of valuers, appraisers who use that skill set to invest and to build their own portfolios or establish their own, call it 401k or
Yeah.
retirement plan. So I assume you're just independently wealthy because you probably by 25 owned all the properties you needed and just collected rent in the pillowcase.
I was with you right up till the end of that statement
Oh
there, Michael.
no, no,
No,
Scott, no.
no. So I'll just generalize my answer and say I think we even tell young aspiring that we tell a lot of appraisers it's an opportunity to use that skill set to do exactly what you're describing.
Absolutely.
Even if my son, he was at Butler University.
Okay.
He's working for a bank in Chicago now. He's on the commercial side,
Yeah.
but he worked 2 summers for an MAI in Indianapolis,
Yeah.
and he said, Dad, he said, even like they had 10 or 12 appraisers,
Okay.
2 analysts, and then my son, right? So that was kind
Oh,
of the
okay.
pecking
That's
order.
where
He
he
was
fits
like
in the pecking order.
he was just whatever you do. They got a big contract to do a bunch of post office reappraisals in 3 states. He was setting up all the files. So anyway, that was his summer. But the whole point in this is he was talking to the 2 very junior appraisers, which were right above him, and they were already. One had a duplex, one had
Good for
another
them.
small property. They were looking,
Love that.
and he's smart enough to understand you can't appraise or get involved in valuing anything
Yeah.
you're going to maybe potentially have an interest in,
Yeah, of
but you
course.
can use that all day long.
Oh,
And that bulb never went off for my dad. We'd drive by something, he'd say that would make a good like a Dunkin' Donuts or a
yep.
Starbucks, or because you and I'm sure it happens to you and many other
Oh,
appraisers too. You just cannot separate from that. But
so
anyway,
I love
I'll
that.
give you a little bit of investing along the way, but nothing crazy. That wasn't my
Oh
forte.
my
So
goodness. It's just the thing that I so appreciate about both your story, being a generational appraiser, your son being exposed to it, is we come to appreciate that when you look at a property, you have no idea who owns it. It doesn't matter what language they speak. Actually, it doesn't even matter for the most part what country they're in, how smart they are,
Yeah.
how much money they have. Somebody owns it, and maybe it's you, but might not be. How was it for you, Scott? Many people in the industry don't get an opportunity to move from one role to another when you went into banking, having been in the field and previously been around the Department of Transportation and some expert witness work.
The market right now is tough for appraisal companies. Many companies are having a hard time getting enough work with the same marketing they used to. Is your company struggling, having a hard time getting new customers, or getting additional work from existing customers? The answer to this problem is easier than you think. Do more business with the people you already know. Over 10 years, the average U.S. appraisal firm meets over 17,000 potential customers. That's a lot of people you could be doing business with right now. But it's a big problem if you don't have a proven process to communicate with them. StoryLex turns this problem into an opportunity to grow. Our advanced AI marketing tool can rebuild your contact lists and harvest long-forgotten communications. Imagine reaching out to everyone you've ever met with just one click. For the cost of 1 or 2 appraisals a month, StoryLex helps you reconnect and market to people who already know you, like you, trust you, and want to do business with you. Act now by contacting StoryLex today to turn your business growth dreams into reality. Email appraisal@storylux.com. That is appraisal at storylux.com. And now back to part 2 of the episode.
Yeah, going into banking was probably the first big eye-opener in a good way. Just understanding and spending all those years with a couple of big banks that I did, just understanding how banks worked and the different nature of lending. And even with the bank in Cincinnati, securitization was starting to come into be a thing, and how we fit into that, but then how there was consumer lending and retail lending was a different animal. And then we had private banking. We'd get some real crazy appraisals in private banking to service some of the big deposit customers. And so you just, I guess that's a way to say, you kind of learn how a bank works.
Yes.
And again, to my earlier comment, I think you learn where and how appraisals fit in and why they're important. And you kind of fast forward just in a general sense, Michael, in my view today, appraisal helps inform a risk decision. It always has.
Yeah.
And it's need-based. And I learned this from my dad. And so a lot of banks, a lot of investors, the secondary market, they're assessing risk all day long. And appraisals are a big part of that, but they're not the only part of that. So that was also, I don't want to say necessarily humbling, but it was just gaining that understanding of where and when it fit and why it's important. And so no, I draw on all that experience as well as my dad's gone, but I think of him every day. So yeah, it's just the culmination of all that.
That's fantastic. And I hear you alluding to that eye-opening experience when suddenly the view of the world suddenly gets expanded. You're like, wait, there's more? I thought it was, in this case, I thought it was just appraisal. And the answer is yes, and. You're like, what do you mean and? And suddenly this suite of other data, opportunities, clarifications, validations, whatever it might be, methods, approaches, information come into the mix. And as you touched on, depending on the size of the bank that you're with and what their lending focus is, that completely dictates what type of assets you're going to see.
Oh, absolutely. And I think there's even elements of that too, Michael, here, and you say all that you can pull forward today that we have an eye on where I sit now with just overall appraisal quality. And a lot of appraisers do a great job. There's a subset where we see some opportunities for improvement. And I think in general, more emphasis on practical applications of appraisal theory and recognized techniques is vital. And I don't know if we've just kind of washed that out of some of the emphasis or the curriculum, but I think it ties a little bit to your point to say, yeah, when you're sitting there and you see all this, you're able to, again, kind of being somewhat younger at the time, you're able to kind of gain that understanding. So I think it's helpful.
And Scott, for you, when you had gone from the field side of the industry to being on the banking side, of course, that would lead to some other opportunities. What was it for you? Because the profession is the profession. There's many different ways to intersect with it. What was it for you that kept you moving along opportunities on, we'll call it that side of the equation, as opposed to moving back into the field and back in those days carrying a clipboard and you got your tape measure?
Yeah, it's a good question. I probably didn't give it as much like strategic or considered thought at the time, other than it was the next opportunity. And I think a lot of people, my dad in particular, maybe you, others, are better kind of small business people than others. That wasn't really I don't think a strength of mine and anything I was interested in pursuing.
Okay.
And I really liked the bank and then the corporate side of the business. And again, drawing on all that experience in the application from being on my own. And that was also, by the way, great. So
Yes.
my wife and I were early married, the kids were younger. It did provide the flexibility and all that you have when you got young kids. But no, I just think, to your question, it was just one opportunity led to a broader opportunity, led to a broader opportunity, and it was more the people I met and the opportunities I learned of versus going on a big job site and sorting through a mountain of job postings. But
that is definitely the case. And for you, having started out in that professional portion of the career in lending and then moving on, what was it that you were continuing to learn with each additional position, especially from those earlier years?
I would say how it's all about risk. I really do. Again, I think a lot of young appraisers, and I was guilty of this too, you do, like on the residential side, you get an order from the equivalent of a corner bank and you return the appraisal, you think that's it. You have no idea the journey that appraisal is going on, and let alone where it's going to fit and what it's going to be a part of. And then that just got amplified pre-crisis with the different securitization and debt obligations and everything that were created, and then the mortgages and the securitized mortgages became part of and tranched and all that. And you're sitting in little West Side Cincinnati doing your appraisal work and diligently getting it done, but you have no idea. And even with the secondary market and just even little things along the way, I think just every one of those, Michael, was just another kind of just a little more light being shined on it, right? I didn't understand as a young appraiser. Every time Fannie or Freddie changed something when we were doing work in the field, it was a big deal for us. It was a software change. It was some kind of update. It was some sort of, and I was out of the field before a lot of the major changes came, but I would, with a lot of appraisers, it wasn't thrilling news or great news. And I'd had to have my dad explain why it was important. And if you do work for lenders that they're going to conform to secondary mortgage appraisal manufacturing requirements, it's going to be that way.
Yeah.
Anyway.
No, that is fantastic. You mentioned that you had an opportunity to go on to GE. Does that mean you were in the GE Capital division?
GE Consumer Finance. I got a little thing up here. It was the consumer finance side.
Oh, wow. Okay.
So it was right at the shift from Jack Welch to Jeff Immelt.
Yep.
I got a little thing from, I was at a dinner and met Jeff Immelt in Houston right after he took over. And
oh, wow.
We went through all the Six Sigma training.
Yep.
Jack Welch was giant on
process.
Six Sigma and lean management. So yeah, correct.
Did you, speaking of Six Sigma, this is phenomenal. This is one of those unscripted moments we couldn't have foreseen. In this season, you are actually only the second person ever, and literally the second person this season, to mention Six Sigma. You want to share a little bit more about it from your perspective, having been at consumer finance with GE?
Yes. So I'll qualify this a couple ways, but I'll happily answer your question. It's been years.
Okay.
and I wasn't necessarily fully Six Sigmatized.
You mean you didn't get your green belt?
Didn't get my green belt.
Oh
Well, and the
no!
only reason I didn't, so there's green belt, black belt, master black belt for those that are not
Yep.
real familiar with this. You can Google it. It's basically a tremendous sort of process improvement system. And I was on two different, we'll talk technical, then we'll go
Yeah.
general. I was on two different greenbelt projects that got collapsed into lean projects, and then
Yep.
they were done.
Oh
Essentially, it's a way to look for efficiencies in process, and it just
yes.
forces you as part of a team. We worked on two different things that were related. Were related to collateral, and you just beat up every single part of it. And you got master black belts that are in the room with stickies, and they paint up a wall with your process, and then everybody challenges everything, and it's nobody. You got to leave your emotion and your feelings
Oh
and
yeah.
all that at the door.
It's fascinating. You were of an age when stickies existed back then, where you had to just take paper and tape it. But to
That's
literally
fair.
have the physical process of taking something that's occurring that may not be in existence, but it's occurring, and then actually break it down to those steps and do a process map. It's transformative and enlightening.
Oh, 100%. And it forces you to look at every part of your process, as you can
Mhm.
appreciate. So, if you've been through a Six Sigma process at all, or
Yeah, you mentioned General Electric. So back in the day, when I was investing in properties, but before I'd gotten into the appraisal and valuation space, we were a large supplier to GE Appliance in Louisville,
okay,
Kentucky. And they came to us back in the 90s and they said, congratulations, you're one of our tier one suppliers. And therefore you must participate in this program. And what they did is they would run black belt programs of disassembly and reassembly of
mm,
appliances because they were looking for, and they're like,
mm,
hey, how can we reduce the manufactured cost? And at first we're like, well, we just kind of have to go along. And then they said, Scott, this was the kicker. They're like, congratulations, next year you're going to continue to be a tier one supplier, and we're going to pay you 93% of what we paid you this year. And we're like, WTF?
yeah,
We were pushing through a price increase. Yes, we will pay you 93% of what we paid you this year. And their point was, you too can apply Six Sigma and you will find efficiencies in your process, which will actually
oh,
help you do, even though you're going to give us 7% savings, if you will.
you can find that operational efficiency
Exactly.
because you've been through the process. That is
Yep.
so funny.
Yeah. So we got exposed first to Six Sigma, and then we moved, because of some international clients, moved over to the ISO standard, which was a whole different ball of wax.
Oh my gosh, I don't. Yeah,
Yeah. Oof.
it was interesting to me. So I never had this supplier corporate kind of dynamic. We were
Okay.
always inside the company
Yep.
looking to have some structured problem solving and again, break down every process to minimize errors and the variability in process. And we learned through some of the big national test cases, McDonald's
Oh, absolutely.
and fast food efficiency was one of the big models, right? So
Yes.
customers, if you got an average time from order to picking up your bag of food at a McDonald's, customers don't feel average, they feel variability. I can't get my food in 30 seconds and yours takes 2.5 minutes, but that averages out to something that the world, you had a worse experience than I did, or type thing. So anyway, it was great to learn all about that, how it relates to profitability and the bottom line. And
Yep. That is absolutely phenomenal. And then how did that continue to influence you as you went forward in your career? Because once you've been exposed to it, you can never not see it.
you can never not see it. Yeah, I think awareness more than anything, 100%. And again, just never getting deep into. We got a couple of VPs at our company now that are black belts, and I
Okay.
think that's part of their DNA is they're just wired to look for those, just that structural breakdown, that pressure test everything. And I think to your question, with me, probably less formalized, but I'm always got a lean frame of mind. Okay, why is this step not? Just question more than anything,
Yeah.
and determine if there's a way you can enjoy some of that efficiency or process efficiency along the way.
Oh, fantastic. How did that opportunity working in consumer finance prepare you for your next role?
Where did I go next? I went to Bank of America. It was all great kind of building block. I mean, it was the nuts and bolts of the practical components of that job were it got to be at GE the monthly loan sale to generally one of the big investment banks.
Yep.
And so we'd assemble the pools. And again, this is pre-crash, Michael. So these were big
Oh,
pools.
they
They
were
were
big.
900 million, billion
Yep.
a month,
Long tape, as
and
they say, long tape.
long tape. Good for, look at you. And so then that whole process over 30 days was, yeah, you scrape the tape, right? You take the percentage of loans that were no brain. Okay, we're going to buy these.
Yep.
Then the next got some level of diligence. And then my job and our team was the last or second last week of the month, I forget, we did the tie out. So that was an
Yes.
in-person, brutal Monday to Friday.
Ooh.
Bankers boxes at the time, everything that got looked
Banker's
over.
box.
We're trying to sell loans. We're trying to get them to buy loans. They're trying to pick the cream of the crop of the ones that were left. And that was the whole process. So I think going through that, to your question, going through that process, I think really helped, again, just make me see and be aware of that through line evaluation, like why that was important there. Some of the sales, by the way, went better than others, and all that hit bottom lines, and they were not always great debrief meetings the following Monday, right? Because it was what it was, influenced what we bought, influenced what we packaged and tried to sell.
Yep.
And again, this value was the absolute thread running through it all.
Phenomenal kind of experience. And as you point out, from being in front of a single property, looking at it through the lens of, hey, what are the characteristics? Is there anything externalities I need to be attending to? Does it look like it conforms to, here's 800 million?
Exactly. And there were people smarter than me there that worked that tape, and there were a lot of lenses on it. One was fraud. Back in the
Yep.
day, there was Philly Row, Baltimore Row. There were what were they, the 313 zips in Atlanta.
Yep.
There were some real flashing lights of where there was some prevalent fraud that we needed to be aware of and
Some
concerned with.
hotbeds of activity, as they say.
Yes. So that was like the first scrape. And then once you got down to what it really was, then it was an arm wrestle on value. And we took a lot of learnings from what we were able to sell and maybe more specific what we weren't to try
Yes.
to push those to the front side to make the files, to tighten them up, not necessarily to make them more appealing, but make sure
Yes.
we weren't exposed to a tremendous overvaluation risk.
I very much appreciate that.
Yeah.
It's a refining skill that most people never get exposed to. And then you mentioned you even had some time to not just be at Bank of America, but also be at Goldman, which is a different world of finance. What was that experience like, compare and contrast to the role you had at Bank of America?
Yeah, I'll keep the gloves up here. Yeah, Goldman wasn't an easy place to work. It had
Oh
a
no,
lot of pressure.
it's intense, very
It's
intense.
very intense, to your point.
The faint of
Learned a
heart will not survive.
No, not at all. That's a great way to put it. And it was just because there was so much going on, and their culture is one that, again, I learned so much at Goldman. I really did, just across a variety of just best practices,
Yep.
business. But I would say their business was pretty intense, maybe in a word, just because they had so much going on at once. They'd have trade
Mhm.
diligence on inbound pools of loans they were bidding on. They'd have diligence on pools they bought but had not closed. They'd have ongoing
Yeah.
portfolio monitoring and servicing on stuff they bought they had on their books. They were executing across the board to an NPL, RPL strategy, right? A
Yep.
non-performing loan to a reperforming loan.
Mhm.
And so it was just, and then all of that through the P&L, which was highly sensitive in terms of obviously what they were going to make. And it was just intense is the only word. But again, learned a lot. I'm sorry, I might have drifted from your question. I'm
No,
not
no,
sure.
this is fantastic. This is what's beautiful about it, because people are like, why would you get into appraisal? And I was like,
Yeah.
well, why wouldn't you? Because you're actually born into a world where you're always already appraising things, you're assessing things, you're considering trade-offs. You just learn a process and an approach to do it formally or professionally and at different scales.
And you're 100%. Hearing you say that, I was struck at the last Appraisal Foundation meeting we went to a month ago, or 3 weeks ago. And you're right. They create standards not just for real property appraisal,
Yeah.
for all appraisal.
Yes.
And then a lot of things we do tie back to the functional things. There's an effort recreating the new UAD, the Uniform Appraisal Data Standard, and the residential side. And really, I don't think a lot of appraisers know, and I try to remind them, and with respect, they don't have a lot of reason to know. This is really intended to be a through line on creating that common digital language that we use it for exchanging data across the mortgage finance industry. The appraisals are the last piece that really is putting pen to paper, so to speak. So that's like the driving why. And I think, again, with respect, I think once appraisers understand, they're like, oh, okay, it wasn't something that the enterprises just thought up in a room and thought it would be, a great idea. It's like, it's meaningful, it's important, and it's got it, and it ties to everything we talked about improving costs, improving margins, speeding up time, reducing errors, reducing risk. It does all that. Anyway, I know I broadened, expanded the question a little bit, but I think that's why it's important. Yeah.
No, it's helpful, Scott. And I just look back on my own experience, much like yours, having been in multiple industries and seeing its own kind of, as you said, through line, even as you in your professional career, me as well as mine. And there's just things that you don't realize that you learn along the way that actually help inform your ability to make decisions or have considerations that wouldn't have been possible without it.
Yeah.
And the breadth many times is quite a benefit, because you're like, I didn't even know that was something to consider.
Absolutely. No, absolutely. Yeah. I think that's the benefit of it, really, maybe in a nutshell, is you take all that and you continue to have those experiences across a variety of different stops along the way. And then you realize, wait a minute, there is some continuity here. There is a reason behind all this. There's a concern of why this is important. So I agree.
No, I appreciate that. Scott, given all that you've been involved with, all that you've seen, all that you've heard, what are you looking forward to or optimistic about over the next 3 to 5 years?
I don't know if I'm an outlier here. I'm very bullish about our profession. I really am. I'm an optimist, I think, at heart. It's changing. Now, having said that, it's changing. It's changing dramatically, and I understand that. And in preparation for this, I went back and listened to a few of the interviews you've done with some of the folks I know, and I know there's some concern about the future of, and none of us have a crystal ball, so I don't know, but I just do know things are changing dramatically. But I would encourage any appraiser, and I bump into a lot of appraisers, particularly on the residential side, to just, if you love the business, you love the profession, you love the work, lean in, be open. We all hate change. I'm at the front of that group. I could chair that committee, right? If I don't get coffee the same place every day, I'm grumpy. So I know we're all creatures of habit and we like doing things a certain way, but I don't want to trivialize. I know it's important. And anyway, to answer your question, I'm optimistic given the fact that I know it's going to change dramatically.
Yeah. I think the fascinating thing to contribute to what you shared was a number of years ago, and I'm trying to think how old he is now. I think he's about 10 years out of college, but under 10 years or so ago, he was about 2 years out. And I remember, and he was one of those artists. He wants to go be in the actor theater kind of space. And I'm like, good luck. That seems risky, but you love it. And obviously he needed a job. He needed to work. And at one point I remember he was sharing with me. He's like, oh, I got a new job. And I'm like, Uncle Michael, Tio Michael is how you say it in the family. I'm like, yeah, tell me about it, Fernando. He's like, I'm a bud tender. And I'm like, oh, you're a bartender. Oh, he's like, no, Michael, I'm a bud tender. And I'm like, I'm sorry. I have no idea what you're talking about. And this is just my view of the world. I wasn't a part of certain activities or industries and changes in legislation, but he was working for a very high end, very well known dispensary in the Chicagoland area. And he was getting paid really well to be on the other side of the counter. It's like walking into a jewelry store, like one of the fancy ones with the lights and the security guys and everything and the systems. And the thought that kept going through my mind is this job legally did not exist some number of years ago. And I'm just curious, when you pontificate, what kind of roles might exist 5 or 10 years out in the industry that don't even exist today? If you were to wave a magic wand and snap your fingers with unicorns and Skittles and see what might be out there.
I have no idea. The only thing that immediately comes to mind, I gave this no forethought or considered thought, was just we're seeing an emergence of related fields and activities that third parties and folks are getting involved in that could be a part of a process that appraisers could utilize. And we're testing a lot of those. We got a lot of those that we're considering. And I think that could potentially be an entry point for young appraisers. That's something we do care about a great deal, is the next generation, whatever that looks like, and trying to open that door. For many years, you and I talked about trying to coordinate this, and I didn't want you to think I didn't want to do it, but at one point I was like, I don't know, I want to do it because I didn't know that my story's that interesting. And then again, I spent a little time across the people you interviewed, and their stories are interesting. A lot of people I know, a lot of people I didn't know, and their different journeys. My whole point is their different journeys were informative to me for maybe potential ways that we can reach out to folks who would be very good appraisers, particularly on the residential side, right? So my story opened with my dad's an appraiser. I used to think that was really cool. The more appraisers I met, not so cool. A lot of appraisers had a family member, a mother, a father, an aunt, an uncle, a friend that got them into the business or exposed them to the business, and they're done. The stories that are most interesting to me are the people that had that got into it through, and I read, was with Michelle Golden recently.
Oh yeah, Michelle.
She was at a place and worked in a newspaper taking in classified ads back in the day. I'll date myself and her, my friend Michelle, sorry, and took an ad from an appraiser that wanted to put a classified ad in for somebody. She's reading it going, I think I'd be good at this. They want to come on over here. Got interested. My friend Rachel Beam with Fannie Mae, she told me she was at a bank and their staff appraiser was maybe a little bit of an older gentleman. He broke his leg.
Oh, okay.
Broke his leg or broke his foot, couldn't drive. So she was young. They're going, okay, you're his driver now for however long he can't drive. They spent all this time together and he poured out all this information and was like her mentor. So my point is there's no real one path to become an appraiser.
Correct.
And I'm all the way back around. I'm more interested in the stories that weren't. I bumped into my dad every single day of my life and I loved it, but that was my path. But if I didn't have that, would I have found any of this? And what would that have looked like?
Yeah, phenomenal. Scott, I appreciate your time. Thank you for your generosity, sharing a little bit of, as we like to say, your yellow brick road story, a little look down memory lane. And friends, thanks for joining us for this engaging, informative, and enlightening episode of Perusing's Appraisers on Purpose podcast. Don't forget to not only like, but subscribe, because Scott loves you and you love Scott. Scott, thanks for joining us.
Thanks, everybody. Take care.
Thanks for listening to this week's episode of Perusing's Appraisers on Purpose. We hope you enjoyed learning from the amazing professional paths and achievements of our beloved guests. Before we go, please subscribe on your listening channel, Spotify, LinkedIn, YouTube, and other podcast channels to hear more from appraisers and valuers regarding their life and their work. After you drop a comment below, who is one friend and peer you can generously share this episode with? If you have any suggestions or questions for future episodes, we'd love to hear from you. Just send us a message on LinkedIn and we'll be sure to get back to you. Thanks again for listening, and until we're together again for the next session of Perusings, Appraisers on Purpose, create the change that you seek.